pertain to my blog, of course, that's on the website jclarkrealty.com. These are 5 types of home loans. So when it comes to purchasing a home, most buyers rely on home loans to finance their dream property. Home loans provide individuals with the necessary funds to buy a house, and they come in various types that suit financial situations. Here we're going to explore 5 of them. Like I said, these types of home loans are conventional, government-backed, jumbo loans, fixed-rate mortgages, and adjustable-rate mortgages. So we'll start with conventional loans. Conventional loans, the most common type of home loan. They're not insured or guaranteed by the government. These loans adhere to guidelines that are set by like Fannie Mac and Freddie Mac. These are 2 government-sponsored enterprises. Qualify for a conventional, borrowers typically need good credit scores and a stable income. The down payment requirement for the conventional loan can vary, but they generally range from like 5 to 20%. Now we're going to government-backed loans. Government-backed loans are insured or guaranteed by federal agencies such as Federal Housing Administration, FHA, the Department of Veteran Affairs, the VA, or the United States Department of Agricultural, USDA. These loans are designed to make homeowners more accessible, particularly on first-time buyers, those with lower credit scores. Government-backed loans often have more lenient credit requirements and lower down payment options compared to conventional loans, but they also do have some like strict here and there things that you have to adhere to, like railings for FHA, different ways of getting in the home. So FHA loans are insured by the Federal Housing Administration. They're popular among first-time buyers and require a minimum down payment of 3.5%. They allow for lower credit scores as well. Now VAs, you can go as low as 0%, I believe. VA loans are available to eligible veterans and active duty military personnel. These loans offer competitive interest rates and don't require a down payment or private mortgage insurance. So PMI, that's $200-300 a month that you have to get with the FHA. That just makes sure that if something happens, you're unable to cover it, the insurance will. So now USDA loans, they're offered to individuals buying a home in eligible rural areas. It's not so common. I mean, in New England, there's a lot more, but you got to kind of find them and then do the vetting to see if they get it. They provide 100% financing, meaning no down payment is required. Now we've got jumbo loans. Jumbo loans are used to finance high-value properties. They exceed the conforming loan limits set by Fannie Mac and Freddie Mac. Since these loans involve larger amounts of money, they typically require higher credit scores, larger down payments. Jumbo loans they have strict underwriting requirements due to the increased risk by the lender. Let's go on to the next one. We've got fixed mortgage rate. With a fixed mortgage rate, the interest rate remains constant over the entire loan term, typically 15 to 30 years. This means that borrowers' monthly mortgage payment will stay the same throughout the loan period, providing predictability and stability. Fixed rate mortgages, they're popular among buyers who prefer a steady payment structure and want to avoid potential hikes and fluctuations in the future. Now there's adjustable rate mortgage. Unlike fixed rate mortgages, these adjustable rate mortgages have interest rates that can change over time. ARMs as they're called. They start with an initial fixed rate period, commonly 3, 5, 7, or 10 years, after which interest rates adjust periodically, often annually. The adjustment is based on an index such as the U.S. Treasury bill rate or the London Interbank Offer Rate, LIBOR, I think they call it. ARMs offer lower initial interest rate compared to the fixed rate mortgages, making them attractive to borrowers who plan to sell or refinance before the fixed rate period ends. So in conclusion, we talked about 5 different loans. If you have any questions, feel free to reach out to me. When you're considering a home purchase, understanding various types of home loans available can be beneficial for you. Why? Helps you know what's going on and what you have that's offered. Whether you opt for a conventional, government, jumbo, fixed rate, or adjustable rate, it's essential to evaluate your goals. Consider working with a reputable lender. Find the best loan option for your specific needs. All right, remember to conduct thorough research, seek advice, and carefully analyze your financial capabilities and situation when determining this, because it is your future, your investment, your time, and your money. Hey, thanks so much. Have a great one.